Do the words depression, recession, inflation, and market crash confuse you? Fear not, we have you covered. With the current global economic environment, it would be helpful to understand these. Firstly, depression, the most severe and long-lasting of the economic downturns listed. Depressions can last for years. Impacts of depression include extremely high unemployment, drastic shrinkage of the overall economy, widespread business failures, and significant declines in asset values. An example would be the Great Depression of the 1930s. What is recession? Milder than a depression, but still a significant economic slowdown. The duration of a recession typically lasts for several quarters. However, the economic definition states that at least 2 consecutive quarters of economic decline. Impact during a recession includes rising unemployment, declining GDP, lowered consumer spending, and business investment. An example of a recession would be the Great Recession of 2008 to 2009. Inflation, what is this? The word which we all hear these days? Inflation is a sustained increase in the general price level of goods and services in an economy over time. It is measured as a percentage rate, indicating how much more expensive things have become in a year. The impact of inflation includes eroding the purchasing power of money, leading to higher interest rates, along with creating uncertainty and hindering economic activity. Types of inflation include demand pull inflation and cost push inflation. Next, onto what a market crash is. This is a rapid and severe decline in the value of assets in a financial market. Such crashes can be focused on a particular market, like a stock market crash, or affect multiple asset classes. The impact of a market crash includes significant losses for investors, creating widespread panic and uncertainty, and can trigger a broader economic slowdown. An example would be the 1929 stock market crash that helped precipitate the Great Depression. Important points. These events can be related. For example, a recession or depression might be accompanied by a market crash, and market crashes can exacerbate economic downturns. Inflation can also occur during any of these phases. Complexity. Economic situations are complex. Often these aren't isolated events, but a combination of factors with wide-reaching effects.